What would you suggest developing sit-out power? Get a hobby. Get a life outside of trading. Or spend the time studying market structures, studying setups, what setups work. That's what you could do instead of clicking buttons. Much more productive. Like if you have a small account, you know, I think like I don't propose anyone should day trade, but I think short-term swing trading is the best for beginner traders, because you can still generate a lot of trades and still have a better risk reward than day traders have. Like these short 3 to 5 day type of opportunities swing trading generates. Exactly what Stockbee calls momentum burst. And you know, aggressively trade that, generate a lot of trades. You know, no one, you know, unless you have an account that's, you know, 10 million plus, no one should be trading like I do. You should be trading the way I have, you know, gone through in my swing trading school, which everyone, you know, should have seen by now. Thoughts on Bill? Yeah, it had had this EP, big volume. I passed on it because, you know, it had all of these declining moving averages. In my, you know, when you start studying the EPs and stuff, you know, these type of EPs don't be great. No, you know, the good EPs are the ones that kind of don't have the declining moving averages. Like if the EP would have been great, it would have gapped up over this area. You know, instead of the 16% gap up, it would have had a, you know, 50% gap up. NRC. No, it's a horrible setup. What do you see here? Where's the setup here? Where's the setup? You should follow the instruction on the screen. There's nothing here. This is a random candle on a random stock. And randomness will get you killed in the markets. Guys, if you don't have a setup, you have nothing. If you don't have a setup and you have money in your brokerage account, you will soon have no money in your brokerage account. Like guys, like the thing in trading, you gotta find things that are not random. Like people trade, a lot of people trade these super random stocks, super random setups. You gotta find the things that are really, you know, special. That's how you make the money. Like I see too many marginal setups. And it's hard. It takes many years to, you know, be able to identify the ones that are, you know, special versus the ones that are random. Interesting that the dollar and the 10-year is up and stocks aren't really dropping yet. I think you're overthinking things. You're focusing on the wrong things. Sorry, but you are. That's okay, you're not alone. Like guys, the main thing in trading, the main thing in financial markets is rewiring your brain to ignore pretty much everything other than what's actually going on in front of you. And most people find it so difficult. That's why the financial markets are full of very smart people with mediocre results. Because it's the hardest thing to do. A lot of people don't seem to realize, even though, you know, you have these macro correlations, it can take months for them to play out. And most of them never do. So why are you sitting there looking at the macro where you could have made a lot of money meanwhile, focusing on what's really going on in reality, you know? That's the problem I see so many people do, man. And they're sitting there with mediocre results. I'm not saying, oh, live in a cave and just look at charts. I'm just saying, don't put too much focus in these things. The main thing you should focus on what's going on. Now, what's the market telling you? Like, are there setups? What setups are there? Does it look like many sectors are topping out? Does it look like many sectors want to break out? Like, what's going on? That's what matters. If you want to make money, that should be your focus. If you don't want to make money, you should leave my community. I don't want you here. What's my reason for not using the 5 moving average? It's the same reason I don't use the 6 moving average or the 4 moving average. It's also to prove a point. It doesn't matter what moving average you're using. The point is, use some shorter moving average, then a midterm, then a little bit of a longer term, right? That's the point. Doesn't matter if you use the 10 or 15 or 7. It doesn't matter, guys. It doesn't matter. Doesn't matter if you use the 50 or the 60, right? The point is, have a shorter term, have a little bit of a longer term, and then you have another little bit longer term. I'm gonna do the ETFs. I'm gonna focus on ERX, maybe Gush. No, not Gush, but OIH, and because these things have a little bit higher ADRs versus XOP and XLE. I don't think it has anything to do with the age. It has to do with my account size. If my accounts were much smaller, I wouldn't be doing these things. I would be focusing on other stocks. And I wouldn't be looking at these ETFs. Heck, 1 month ago, I wouldn't be looking at these ETFs. It's something that struck me just like a few weeks ago. Like the liquidity, like the size you can do in the ETFs. Even though the dollar volume is low. It's pretty amazing. You know, a few times per year, you're gonna find something like a new type of edge or something that's gonna, you know, take your trading to the next level. It only happens once or twice per year, but when it happens, it's just an amazing feeling. It's like, wow, holy shit. It's just like you found gold or something. Well, that's my point. You can't compare ETFs and stocks because a illiquid stock is just illiquid. An illiquid ETF can be extremely liquid. Like, I can easily double, triple the average daily volume in an ETF with no slippage. You can't do that with a stock. And GME, I think this company won't be around in 5 years. But yet, it's breaking this big range on the weekly. It's been building higher lows for many months, and the technicals don't lie. Short term, it could easily go back to 300 plus. You know, you can't argue with the technicals. AMC, if it was a pocket pivot, it was definitely some type of setup. You know, I would have preferred a few more days sideways and having it tighten up a little bit. That's something I would have actually maybe even traded. It was a very little flag, you know. But the explosive stocks, that's how they behave. They find support on the 10-day versus the 20-day. Slower stocks find support on the 20-day, and even slower stocks find support on the 50-day. Is it the bear flag? Yeah, it couldn't bounce for shit during this last week's rally. That's weakness, man. Holy shit. If this rally fails and this thing starts breaking down, I may short it.